Now the first strategy we'll be looking at is the 300 EMA and 50 EMA strategy. So for this strategy, we will add two EMAs on the chart, one with a period of 300 EMA and the second one with the 50 EMA. So in this strategy, I'm using 25% stop loss, but in your own chart you have to calculate the lot size, the leverage, so that the 25% that it shows on the trading view right here, it is 10% on your charts. So in the chart, we'll just go to a random time in the past and look for the engulfing candlesticks. So we're gonna go back in time in the chart to any random period and look for an engulfing candlestick on the EMA 50. Over here we see an inverse head and shoulder pattern on the other side of the EMA. So this is the reversal pattern. And over here we spot an engulfing candlestick. We open a long position with 3 risk to reward ratio. And it went into the stop loss. We lost on this position. Now we'll look for another opportunity. And as you can see that the trend has changed to the downside. So we'll look for the candlesticks right here. Here we spot two candlesticks, one here and one here. And we're going to open sell position on either one of them. And as you can see, it went into profit. Over here we see another engulfing candlestick, but it's too big for our liking, so we won't be taking any trades on this one. Even though as we can see that it has made a good enough move after this candlestick, but at the time of its forming, we don't know if it will move or not. And big engulfing candlesticks are a bit risky as well, so we look for another opportunity. Over here we see two engulfing candlesticks, and we place the position on this one, or this one. And either of the two positions went into the take profit. Now we look for another opportunities, and we find one right here. And it was a losing position. We go and find more candlesticks. We find one right here. And it was a losing position. We find two opportunities right here. This one went into the stop loss. This one went into the take profit. We see one right here, and it went into the stop loss. We spot one right here again, and this was a losing position as well. We spot a few right here, and we take a position. And it was a winning position. So now we have taken 10 trades, and now we'll do the calculation and see if we're losing money or if we're profitable. One loss right here, one win here, again another win right here, one loss here. This position was a loser as well. Loser again on this one. This position was a winner. This was a loser. This one as well was a loser. And this one, the last one, was a winner. So 6 times 10% loss is 60% loss. And 4 times 30% gain is 120% gain. So in this strategy, we're still 60% in profit. So we gain 60%. Now, moving on to the second strategy. In this strategy, we'll be looking at is the 50 EMA and 20 EMA strategy. So we'll add the 50 EMA and 20 EMA on the chart and do the same thing as the first one. Over here the price is chopping way too much, so we don't take any trades and we wait for the market to go in a trend. Over here we see that the market has made a massive move and this can potentially go into an uptrend, and it did, as we can see. So now we start looking for the engulfing candlesticks. Over here we spot an engulfing candlestick and we place a trade on this one. We see another one right here and we place another position on this candle. We see a red engulfing candlestick right here and we place another trade. We see a green engulfing candlestick over here and we place a buy position. We take one sell position here in this engulfing candlestick. Here we spot another one and we take the trade to the upside. One to the downside on this candlestick. Another one to the downside over here. We place one buy position over here. And here as well, we take another buy position. Now let's look at our win rate for this strategy. So we have a winning position here, a losing one over here, another losing one, then a winner position over here, a losing position, and again another loss. But then we have another winning trade, then a loser again another loser, and the last position went into the winning side. So we have 6 losers and 4 winners, and it's the same like the previous strategy, 60% loss and 120% gain. So that's 60% gain again as well. Now, the third strategy we'll be looking at is the 200 EMA strategy. In this strategy, we're not using two EMAs but only one, and the period of that EMA is 200. This is the only strategy where we'll be using a bigger risk to reward ratio, and the reasoning behind it is because it's such a big period moving average, the price doesn't touch it often, but when it does, the price does a massive move toward either of the side. So the risk to reward ratio for this one will be 1 to 5. So we're gonna randomly go back in time in the chart and spot reversal chart patterns on the opposite side of the engulfing candlestick. But over here we couldn't find any as the market is already in an uptrend. So we'll just look for the candlesticks on the EMA. Over here we spot one and we take the trade. And we go and look for another opportunities. And now we spot a reversal and continuation pattern on the top side of the chart, and we look for the opportunities on the bottom side now. And we do spot an engulfing candlestick on the EMA, so we place the trade on it. Then we spot another one right here, and we take the trade. We see another one right here, and we take the trade. Over here we spot three engulfing candlesticks and we take the trade on either one. And then we let the trade play out. We see another engulfing candlestick on the EMA and we take the trade. Now over here we spot two different engulfing candlesticks. One here and one over here. And we take the trades on both of them. Here there's another engulfing candlestick, so we take the trade on this one. And now, while trying to find more opportunities, we actually ran out of the chart. But anyways, let's say we place this last trade right here. And we'll count this as a losing position. So now we have taken all the trades, and now we'll look at our win rate. And we will calculate all of them and see if we are profitable or not. So we have one winner right here. Over here we have a loser. Again, another loss. Another loss on this position. And now we have a winner on this side. And then another winner position right here. Over here we had two losses, which were these two positions. And over here we have another winner. And on our last position, we're gonna take it as a loser as it did not play out fully. So another losing position. So now let's calculate all these positions. We had 6 losers, so that's 60% loss. And we had 4 winners, that's 200% gain. So that is around 140% total gain with this strategy. So these are the 3 strategies that you can add to your trading plan or build one according to these strategies. Now before you get started, you need to know a few important rules about risk management when it comes to trading these strategies, and we'll be talking about them in the next section.